Are you overwhelmed by fundamental analysis data for commodities? Have you ever felt swamped by the sheer amount of fundamental analysis data when looking into commodities? You are not alone. Many investors find themselves in this situation. Understanding fundamental analysis in commodities is key to making informed decisions. This involves looking at various factors that impact supply and demand, which ultimately influence prices. Let's break it down. Fundamental analysis aims to determine the true value of a commodity by examining the forces of supply and demand. For instance, if geopolitical tensions arise, supply may decrease, leading to higher prices. On the other hand, if production increases or consumption drops, prices may fall. To navigate this complex world, it is helpful to know where to find the right data. Key sources include government supply and demand reports, such as the World Agricultural Supply and demand estimates for grains. The commitments of traders reports show market positioning, while inventory levels provide insight into current supply. Additionally, qualitative factors like political events and economic growth rates play a role. Macroeconomic factors also affect commodity prices. Interest rates, inflation, and currency strength can influence how commodities are valued. Since many commodities are priced in United States dollars, a stronger dollar can lead to lower prices in local currencies. Different sectors have unique influences. For example, energy commodities react strongly to geopolitical events, while agricultural commodities are heavily influenced by weather patterns. When analyzing commodities, you can use different approaches. Top-down analysis starts with broad economic conditions and narrows down to specific commodities. In contrast, bottom-up analysis focuses on the supply and demand fundamentals of a specific commodity before considering broader economic influences. Feeling overwhelmed can stem from the diversity of commodities, each with its own supply chain and market drivers. Investors often need to track multiple data points, and the timing of reports can be tricky. Sudden events like natural disasters or political crises can quickly change market dynamics. Integrating fundamental data with technical analysis adds another layer of complexity. To manage this data overload, consider a few practical tips. First, focus on a limited number of commodities that interest you or where you have some knowledge. Use summary reports and trusted market commentary to filter out the noise and highlight key information. Establish a routine for monitoring essential reports and economic indicators related to your selected commodities. Combining fundamental analysis with technical analysis can also help confirm your trading signals. Lastly, consider using software or platforms that aggregate and visualize fundamental data to make it easier to digest. Fundamental analysis for commodities is indeed data-intensive and multifaceted. It is perfectly normal to feel overwhelmed at times. However, by structuring your approach, concentrating on relevant data, and utilizing analytical tools, you can simplify the process and enhance your investment decisions.